Hi, this is Randy Finney with Right Side of the Chart, and this is a after hours video. Markets are now closed, but I wanted to do one more today. I was going to get this one out earlier. Figured, you know what, I'll wait till tomorrow. I already got you two videos earlier today, and now I can see McDonald's getting hammered in after hours, and that would have been the first stock I would have covered in this video that I was going to do earlier today. So it's earnings season, so that you're going to have these catalysts take off. I think there's something to do with E. coli too going on at McDonald's. I just saw a headline. Either way, they're down, and I'm going to just cover this as a trade idea, and that is, or those are the restaurant stocks. Now, you want to keep it very simple. EATZ, like the word EATZ, but with a Z at the end, is the Advisor Share Restaurant ETF. I've shared this trade idea in the past. In fact, we had it back here. We had this rising wedge. I give you 1 or 2 targets. First was hit, and that was it. So we got a quick, whatever that was. And then the stock kept holding T1, that's first support level, went up, made a marginal new, but still even bigger divergent high. So this was that bearish rising wedge. That was a divergent high. You can see the negative divergence there. And from that point, the divergence has only grown larger, and that's typically indicative of a much larger drop. So what you're waiting for here, and I have the after hours trades on. This is just a thin ETF. Thin ETF means it's not actively traded. Most people don't know this thing exists. Volume is relatively low. You can go with PEJ, which I think has, it's somewhat related. They do have, yeah, they do. They have restaurants in there. I can see them in there. Domino's Pizza, DPZ, Wing, WING. But it also has things like Airbnb, Booking.com. There's Chipotle in there. So again, this one has a little bit more liquidity, I believe. Either way, if you're swing trading, that doesn't scare me because ETFs tend to track. Oh, they will track the price of the basket of stocks in there. You just want to use limit orders to enter and exit on thinly traded securities. And how do you know if it is? When you pull a quote. If you use the bid and ask, if they're more than a penny or two apart, then you definitely have, and you can look at the volume, of course, but that's the first tell. Anytime you buy a stock, look at your quote. Don't put a market order if you have a 10-cent spread between the bid and the ask. There, you're going to get a pretty ugly fill on that. Use a limit order, split the difference, or do what you want there. Okay, so the setup is that. You can see divergent high. These guys are, a lot of these are indexed stocks, so they're going to appear in the various, small, middle, large cap indexes, these restaurants, and so they'll go up and down with the market. My view on the markets. I told you earlier today, I don't really, have big thoughts on the election. Obviously, I'm not a fan of either candidate. I know they do have I knew that each of them have their own fan base, so I don't mean to offend anybody. I think we can all agree when it comes to politics, religion, all that other stuff, to each their own. But most people that I know aren't voting for somebody in this next election cycle. They're voting against somebody. That's again, just the majority of the people I talk to aren't crazy about either candidate. So I don't see a lot of hopium built into this election. I think it's lose-lose for the country. It's just my 2 cents. And so therefore, if there's going to be a catalyst for a sell-off, that's what I'm speaking to now. It's probably going to be between now and November 6th. And that's, you get the worry. The media is going to hype up the worry, or the Trumpies going to get mad and protest and all this other stuff. So just park that thought. Just know that goes into my analysis. If I had to flip a coin, whether we're going to have a rally into and maybe even coming out of the elections or sell-off, well, first and foremost, based on the technicals, it would be a sell-off. So I'm including that in this because these stocks, again, are poised. They have similar charts to the markets, the divergences and everything else. So that's it. There's the ETF. Oh, I probably should have given you price targets. You know what? All right, let me just add one more right now. It's considered a new trade because this one that was from a while ago, you would have been stopped out. I don't know if I had a suggested stop at the time. Let's see. We went up a total of 12% since that breakdown there. We hit that first target for about a 6% gain. T2 would have been a 12%. So yeah, you would have been running a 1-to-1 RR. That would have been stopped out, any reasonable stop. But now, so here's your targets. I'll do it this way. We'll just T1 right here. T2, I'm going to pull this line up now. That's T2. It's 24.77. Cover a little bit above that if that's your target. T3, you have the 200-day moving averages in there too. We'll probably have a hiccup somewhere around there. And so these are now considered an official trade setup pending a break of the uptrend line, especially a solid daily close if you want to minimize the chances of shorting into a whipsaw. And I may add this as T5 down here. Let's just do these targets. So what is the profit potential? 15%. If you used a 3-to-1 RR, that again, assuming a breakdown tomorrow or anytime soon, 5% stop loss would be somewhere up here, about 28.50. That would again provide a 3-to-1 RR if targeting T4. If you're only targeting T2, which is an 8%, 8.5% drop, then you want to run a tighter stop somewhere maybe around there, about $28 or so. Okay, let's just go through the components. There's Mickey D's. I've nicknamed high school, my friends and I, we were all into working out and health, and we called it McAbdominals. Everything was opposite. So, it was you want to have a six-pack, you don't eat McAbs, we called it, or McAbdominals. So Mickey D's earlier today, I was going to get this video out to you guys, but again, it was a third of the day. And I said, I'll get it tomorrow. But now that this is broken out in after hours, I have the after hour trades on here. I'll toggle them off and you'll see what things look like without it. So that's why I'm doing the video this late. Because if the rest start to break down, I doubt McDonald's is going to snap back up. This is where we closed today. So it was a beautiful bearish rising wedge. It was one of my favorites. First target would have been right here. We shorted this one back here. I gave you a trade. These were the parameters set all the way back on July 31st. Or I updated, July 31st. A stop on the red line, which never got hit. We hit T1, T2, and all the way down to that level there. And so now going in reverse, well, it's a whole different thing. I'm not going to say we've come full circle. That was one trade, and that trade was completed. I think I highlighted him back here last time on the breakdown there. We went down. You can see this one trades very well to the technicals, and that's why I'm doing a video. Again, if you want to keep it simple, use an ETF. You don't have to navigate earnings. You can see the earnings right here. I believe they reported. I just glanced some headline and it jogged me to sit back down and get this video out to you. It might just been the E. coli breakout or something going on. I'll have to check that. But either way, I'm going to turn the after hours trades back on, show post-market trades, and you can see this is what happened. So something knocked it down there. Whether it was earnings or E. coli, it doesn't matter. The charts are the charts. That's why we're doing this. If I didn't believe in the charts, then what's the point of doing all this? It's just you're guessing. Anywho, that one, and again, I wouldn't miss an objective entry. Now, if it kicks back tomorrow, I doubt it'll do it, but any back test of the wedge would get it. This would have been my first target right here. This was a breakout to new multi-year highs, and that breakout has now failed. So that's bearish too. So you want to watch this tomorrow. Basically, whether it's tomorrow or 3 weeks from now, if the stock is trading well below that 300-ish level, then this breakout failed, and that's quite bearish. And I think you're going to go back down here to this level here. Let's just say that's my final target, 245.39. From where we're at right now in the after-hours session, that would be about a 16% drop. In the weekly chart, on just like the stock market and everything else, they're setting up for a bigger and bigger drop. The excesses, I covered my low volume indicator today. I look at things like put to call ratios, bullish bearish sentiment surveys, AAII, market breadth indicators, and all that. And this casino keeps chugging along. Anywho, what I'm looking at here is just a big divergent high that's going to lead to a bigger drop that I think ultimately will bring McDonald's down, possibly all the way down here. That would be a much larger drop, another 60-something%. Okay, let's rifle. There's not many. It'll be a quick video. The common theme here, again, is how the current technical posture. Again, birds of a feather flock together. Fundamentally, I'm just sidestep for a second, digress. I read, just was reading one of many articles recently over the weekend from the Journal, I believe it was, or Barron's, about the restaurant stocks and the spike in bankruptcies we're seeing this year. And so EATZ is as if it didn't happen. Red Lobster, Tijuana Flats. I can't name half of them because some of them are regional restaurants, but there's been a noticeable uptick. They talk about people eating out less, and those that are eating out cutting back on the bill. The uber wealthy are doing great because the stock market and real estate market are new highs. But then that's where, not the uber wealthy, but most of us, if you're listening to my voice, you're doing this because you have a stock trading account, you have stock money in the stock market, you probably have a 401k, IRA, and you may or may not have a house. Hopefully, that's just fine. Some people rent and have a lot of money and can still trade stocks. But my point to that is the fundamentals have been, decreasing or increasingly negative, bearish for the restaurant sector as a whole. And this is at the stock market, the S&P right off all-time highs. God forbid we see what I suspect, a 40+% drop in the coming year or two. That is going to wipe out consumer spending and discretionary spending, like eating out and buying that $15 burrito at CMG, which we're looking at here, or whatever it is. I haven't been to Chipotle in a while. But so either way, guys, here's the chart. So I'm going to just show you. I can tell you fundamentally there's a good case to be made to short these stocks. And, we've had this market in autopilot, and that's it. And valuations continue to get extreme. But there's a divergent high. There's a divergent high. It's watch, rinse, repeat. See this bullish falling wedge, breakout back test. You go long, get the divergence there. We had a breakdown. This sometimes happen. I think this is happening with the mining stocks now. Quite a few broke down recently, went back above their trend line, but then you see a brief kind of blow off top there. You can see the volume surge indicative of a buying climax. But this is a primary uptrend line and a price target right here. This is the bull market uptrend line, comes off the beginning of the 2023 lows, and we already hit it and bounced there once. To hit it again, we'll probably see us ultimately go through it. And this is right now a potential price target. Let's just call it my sole price target. And again, I'll update these especially if we see more breakdowns. So the takeaway is McDonald's, the biggest one by market cap, $228 billion. The next largest is right here. Again, I do this. And by the way, these are just the holdings of EATZ. So it's not all inclusive. I may add some other individual restaurant stocks. But when I cover an ETF, as you know, I have my charting platform will queue up the components of it on the right on this little watch list here, and that's what I go through, and I have them sorted by market cap. So keep that in mind also as I go through these videos. The ones up top are the bigger market cap, so they're more liquid, technically, for lack of a better word, a little more safe than when I get to the bottom of the list. And in this one, Loco, the lowest, smallest one, El Pollo Loco, Pollo Loco, is $417 million stock. So that's much smaller. All right, back to the chart. So there's Chipotle, break of the bearish rising wedge, set a price alert on that level. This one has yet to break. I still have the after hour trades on. And it looks like they're reporting coming up here. This charting platform I'm using isn't always right. You want to check earnings.com, or if you want to be, I've seen earnings.com report the wrong dates. You want to really make sure a stock that you're either about to take or already currently own, you want to make certain of their earnings date. Check their website under the investor relations or news. They're always going to post on there when they're going to be reporting earnings. That's just kind of a takeaway I've learned over the years. Don't always rely on charting platforms and websites like earnings.com. All right, there's the first target, 56.82, and then the trend line, and then that 43.45. Looking for, again, assuming a sell signal. Looking for a total drop of probably up to 28%. And again, I can't over impress the importance of or the difference between a trade setup, which this is. A setup is a potentially bullish or bearish chart pattern pending an entry via a buy or sell signal. In this case, a sell signal, break of the trend line. And then, if you take it and you short, we get a bounce there. Your next objective entry add-on would be either back test to resistance, 60.22, or back test to the wedge. Here, let me draw it out for you. So this is how if you miss it or you took a starter position, And we get a bounce and a back test. That's your next objective entry, a back test of the uptrend line or the bottom of the wedge, or that 60.22. This is price resistance breakout. See the big green candle break out to new highs, successfully back tested it there, successfully back tested there. There, the breakout to new highs failed and the bottom fell out of the stock, right? And that makes that a very significant resistance level, which it's also at now. In fact, you want to be even a little more aggressive. There's no sell signal in this stock yet, but one could make a case to short it here because it's a rally into resistance following a sell signal. You know, like my views on the market and, you know, stocks like NVIDIA, which are testing, but it's still pretty much peaked back here, you know, months ago. The NASDAQ 100 peaked back there months ago, back on June or July. So many things did. So I'm viewing this as just the first leg down, counter trend rally with more downside to come, and therefore that makes this an objective short entry here at resistance with a stop somewhat above. Somewhat is relative to your price target or targets. You know, deeper your targets, more room you might want to give it, but I'd say somewhere not too far above. And then boom, you add on there or enter there. Again, there's a lot of, that's why I'm showing you there's many ways, and it's not so easy now in these trade updates, you know, and you know, tracking this stuff. It's, you know, multiple entries at different prices for different investors. The aggressive trader taking a shot here, the more conservative conventional trader waiting for a breakdown of the wedge, and or maybe even break down below 56.82, the first support level. All right, moving on. YUM, or what I call Yuck, Yum Brands. They own, you can see, Pizza Hut, KFC, Taco Hell, Habit Burger, Grill. And this one looks kind of sloppy, right? Is a big, like a big EKG, but you had a divergent high there. We shorted it. You had one there. I think I highlighted it again. We shorted again. If you go back, I believe in the video. And then right here, that was the most recent divergent high. There was your sell signal. And so this is a kickback to about where it broke down. And more importantly, you can see this is just massive resistance. Now, look, if this stock breaks out and never looks back, maybe it breaks out, back tests, or a slight undercut, and 3 months from now, 4 months from now, it's up here, you don't have any divergences. I can tell you right now, if it does, something happens and the stock does break out, you're going to have divergences here like this. You're going to extend that divergence right there. You're even going to have divergence going back here. And when I see that much larger divergence, like I'm drawing right here, going back from this point, something like this, and I'm on a daily chart now, and there's 2023, 2024, that tells me, hey, take a look at the weekly chart, which I do anyways, by the way. I covered them. If I covered every time frame in these videos, we'd never get through them. This is the weekly chart for Yum. Trend line off the COVID lows right there. Obviously, the bottom fell out of restaurants as people weren't going because they couldn't go in many states. Here we were, you know, Florida, we were mostly open, but most you around the country were, most of these restaurants are closed. And then you had a trend line break and a back test right there. And that's it. So this is that big divergence. It's been building. It's also big resistance in that area. Each time we go and we make it ever so slight marginal new high, but it's a divergent high, a breakout to a new high with divergence and overbought conditions, has a much higher rate of failing. And that one failed, and that one failed, and any one that would happen anytime soon would fail. But I can also say we're at resistance. We don't have to make a marginal new high. And if we do and we go up a lot more, then guess what? Stopped out, it's done, move on to the next one, and either go long if that's your thing, or wait for the next objective setup. QSR, they and I haven't updated this in a while. That was updated last in 2023, the middle of 2020, or no, I updated maybe I just moved it, so now it says updated. Tim Hortons, Burger King, and these are also, Burger King, Tim Hortons. I think Burger King, did that go kaput already? Popeyes, Firehouse Subs, all those are in this one under their label of brands. And you can see this one put in a divergent high there, just like it put in a divergent high there, just like it put in a divergent high there, just like it did there, and just like it put in a divergent low here, and a divergent low there, and a divergent low there. So kind of a mixed bag on this one. Glass half full, glass half empty, however you want to see it. We really have bigger divergence starting. If you look down on the indicators from this point here, all along it's been diverging. So this is really a these are consecutive, much larger divergences, which again will show through on the weekly chart. So that has the potential to be a big divergent high there and the initial leg down. Now I do have to point out, recently put in positive divergence here. Earnings coming up November 5th on or around, at resistance now. But again, when you see those big divergences, and I haven't marked this one up, but I'll do it right now. You can see right there. There's what it looks like on the weekly chart. And you can see we had pretty big divergence heading into COVID, and that big drop there. So there's that one. Not one of my favorites. I'm not going to give you price target, but I will. You know, like I have a level here. I've had it for a while. It must have been. Let's see when I created that line back in October 22nd. Okay, would have done it today. That's it. So yeah, that is a potential target. DRI, Darden, Olive Garden, Longhorn, Ruth's Chris, Bahama Breeze, etc. All those brands there. Kind of looking maybe a little head and shoulder-ish if I go out to the weekly chart, which I'll do here. Maybe a left shoulder. That head would ideally be a little higher. Right shoulder, neckline, something like that. Yeah, let's take a look on the weekly. Nah, I don't like it. I don't like it as head and shoulders. But either way, I can say there's an uptrend line there. And, you know, it's also been diverging. And peaked back here so far, like so many things, back in a few months back. And then had a sell signal there after that divergent high. We had a divergent low. So, you know, this is the market. The market's been a lot of sectors up, down, at or near new highs, but seem to be pretty toppy. We know valuations are extreme. And again, the fundamental backdrop of this industry, I think what's kept a lot of things going are stock buybacks, the low borrowing costs that they locked into. Remember, I've talked about this. After COVID hit and the Fed pulled out the nuclear option, rates went to zero, at least overnight federal funds rate, but even long-term rates. Most companies in the mid-cap range, small caps borrow average borrowing costs, or I'm sorry, maturity when they borrow. Small caps are very highly dependent. I don't know if this one might be a mid-cap, I believe, but about 5 years. Large caps tend to be closer to 8 years. When I'm talking about the debt, when they do borrow, large caps are generally less dependent on financing. So you had that, and a lot of that's coming due now. And remember, the grand plan was that they were going to come due, and they were immune because they locked in at low rates 5 years ago, and that rates would be a lot lower now, and they're not. We had that, you know, again, Fed's been cutting lately, but all long-term rates and even the intermediate term rates that they borrow at, 5-year, 7-year, 10-year treasury bonds, and especially corporate debt's been going up. The last shoe to drop, I'm looking for a credit spread. Starting to wait for those to blow out, and then we'll know it's get out of Dodge moment. And you're seeing that. You've seen bankruptcies here in this sector, but yet we're not really, I should say, we're not seeing credit spreads blowing out yet, but they've been ticking up. So I'm going to continue to monitor that. Either way, there's a trend line. That's what I should have done for you right there. Break of that level would trigger a sell signal. Where to? These were old. You can see here. These are all these lines here were from this last trade. I would have probably given it as a short trade with a breakdown right there. We hit T1 was a trend line. Hit T1. We hit T2. We flagged on it. We hit T3. We flagged again, and then we hit my fourth and final target there. That was whatever that was back then. And so this is it. Kind of like a little EKG, but a tradable. See, that's the thing. That's why I'm doing this video. This sector, they're very tradable stocks, these trends. It's like up or down. There's really, you know, if you're an investor, you're frustrated because you've gone nowhere in 3 years now, or 2 or 3 years. But if you're a swing trader, you just swing these rips and dips, get out when your final targets hit, and or when you see positive divergence, aka bullish divergence right there, divergent low, and then back in. You don't always have divergent highs and lows for a trend change, but it's certainly something you want to take note of when you get it. QSR, TO, I already covered QSR right there. So this is just, they had that one. It's in the ETF for whatever reason. They own the Toronto Stock Exchange listed shares right there. CAVA, CAVA, there's just all I can tell you is big old negative divergent high there, just like you had a divergent high there in the breakdown. And here's your targets, 110, 97, and then 71 for a total of, oops, didn't want that. go away. Okay, measure it out just to kind of put it in perspective. 18% drop, 28.5, and then 47% drop if that target's hit, that 71.44. USFD, U.S. Foods Holding Corp. Uptrend line, big divergent high, sell signal come on that. First target 55.46 and then $50 right there. Let's just leave it at those two for now. I think that'd be pretty nice swing trade, about 18% drop. DPC, Domino's Pizza, big old divergent high, just like you had a big old divergent high there. From there, the stock fell about 50%. You would have doubled your money on a short trade. Divergent low there. Again, rally, counter trend rally, another divergent low. It's not marked as such, but it was making a series of divergent lows, just like a lot of stocks are making series of consecutive and larger divergent highs. So that was DL2, and you get the point. So, and these counter trend rallies, even catch a, like I say, find me a bull market, a bear market, and you can trade the swing traders, actively trade the trends within there. These are all double digit, 30+% rallies off these little divergent lows. And then finally, DL1, DL2, DL3, DL4, it was that fourth and final and consecutive divergent low. Again, these lines carry forward from this point here all the way back. That's when we started to diverge. And each one was a kind of cover shorts, get in. Not that we did that each and every time, but I'm showing you how to, how I see the charts and how I try to trade things. If I stay on top of any one stock, that's what I've been doing there. But I'll kind of, these things drop in and out of my radar. And right now they're on my radar. So this one peaked there with a big divergent low. A big divergent high, broke down. And right there, they're going to, next earnings, February 24th. Okay, maybe they just reported recently. But if you look at it, turn off all the lines, forget about divergences for a second, you can see it's below the 200-day moving averages, just like it was here. It lost the 200s right here, the red and blue line, the 200 simple and exponential, and it was in a downtrend. What do you do on a downtrend? You short rallies back to the 200. And then once you see the 200s clearly taken back, then you're in a bull market, a bull trend. What do you do in a bull trend? You buy pullbacks to the 200s, right? And they lost them again, so they're under those. So that's that's why this current divergence may not play out, and it's small positive divergence coming on the top of much larger negative or bearish divergence. KC, Casey's General Stores, trend line 1, set an alert there. There's your sell signal. BOD, or benefit of the doubt, first support level 366.46. Puts us in this trading range. Next target or support and or price target about 350.40 with the secondary trend line that comes off the June of 2023 lows right there. So this one should play out something along these lines here. Again, if the sector breaks down soon. See, a lot of these haven't broken down, and up until after hours today, McDonald's hadn't either. That's why I was going to wait to do this tomorrow. But with the big dog, McDonald's breaking down, that's why I'm getting the video out to you. So, and it's simple. I know these videos are long-winded. You might in the very beginning said, well, okay, Randy, I agree with you. I want to short them. I've heard fundamental reasons to short the restaurants, and now you're making a technical case. But I'm going to keep it easy and short EATZ. You want to increase the odds that EATZ is going to go down and hit those targets. What you want to see is the majority of these, especially the bigger names, breaking down these levels I'm showing you. McDonald's, Chipotle, Yum, QSR, DRI. And once you get the majority of those breaking down, it's going to increase the odds that breakdown will stick and those deeper targets will be hit. Ultimately, Casey, I think, will come and visit this longer-term uptrend line off the early 2022 lows. If so, you're looking at a short potential trade, depending if and when hit, at about 25-26%. Probably have some price support come in there around that time, about 289, 290, we'll call it. TXRH, Texas Roadhouse, big divergent high. You had a trend line break here, and it just went sideways for a while. Made a marginal new and still very much big divergent high. Like everything else, like the stock market I showed you today, my low volume indicators, you can't see it here. My volume bars are shrunk down, but volume has really been, this thing's moving up like so many things on fumes. Volume's just, short sellers have left the building. They've given up. This market's just been drifting higher right now. And there's a little minor trend line that should do the trick. And your BOD, or benefit of the doubt, first support level, I put that line there because we had this trading range here, right there. And we broke out here. We've been back testing the top of it. So I'm going to set a price alert there, 173.63, give or take. You can put it a few pennies down if you want to be safe. That's your sell signal. Short entry, and then when this level breaks, the 200s will have given way, and then this guy has a lot of thin air. Thin air, you have a massive big old gap right here, but more importantly, if you look at my volume price histogram bars, you have a big thin zone, this whole area here, meaning there's very few trades that occurred in this area. So once it enters that, it'll probably be a quick swoon down and all the way down here to about 117. That gives you a total profit potential if you're willing to ride it out or you game it successfully, about 35% drop. Wing, W-I-N-G, Wing Stop. I believe that's the one with the big buffalo in their commercials at the bar. Divergent high there. Nice support here, 343.60, and it's just below the 200-day moving averages. Got to like that setup. Set a price alert there. You can see, again, I haven't marked all these charts up since a couple of them I've added a few lines, but again, there's just this void here, something, just a very big thin zone right there. So I'm going to put a line here. The bottom of the thin zone really starts about right there. So this one, I believe, has a potential, if you want to just hold your nose and short it and set an appropriate stop. Again, appropriate is going to be relative to your target. That's a 43% drop from where we're at now. Or let's from the entry point. From a break under 343.60, that's going to be a drop of 38%. Well, I tell you, you wouldn't want to put it much more than that. That would be a pretty big drop there. You can even do this. If it breaks down, gives you a sell signal, the sector confirms, keep a relatively tight stop somewhere in the middle of that range, and that would give you a very nice RR. And ultimately, I think it could even go down here to that 175 level. So that's WING. Got a few more, and we'll wrap it up here. ARMK, Aramark. I've never heard of them. I don't know what they do. Maybe I have read about it. I don't know. Bearish rising wedge. That's all I can tell you. With a sell signal come. Not one of my favorites, but certainly one. Birds of a feather. So BROS, Dutch Brothers. Look at all these tags on that level right there. And, some of these, as I get down to the lower end, these guys are already in their own bear markets. I mean, this thing peaked back here in 2021. Today, it's trading 58% below there. And so, you might say, oh, it's in an uptrend now. There's support. There's something wrong with the economy firing like the way they say it's been firing, and stocks, restaurant stocks that are not making money. They're not making money in this environment. Good luck in the environment that I see coming over the next year or two, if I'm correct, with the lag effect on interest rates and really the technicals playing out the way they are, our huge debt problem in this country and everything else. SHAK, Shake Shack, or like I like to call Heart Attack Shack. You have a big old divergent high right there. And that's it. You can see this thing diverging, making these incremental marginal new highs. Uptrend line in which to trigger short sell signal comes there. That's an older line. I'm going to borrow that line and move it down here. These are your key levels. So break of that trend line should take us down to 92.80, and the intersecting uptrend line, that's going to give you, again, assuming a breakdown came tomorrow, let's just say, or at these levels, almost a 15% drop to that level. You most likely bounce there, again, depending on what the sector and the other stocks are doing. Then down here, so 81. These are your two targets, $92.80 and $81 right there. That 81 target would be, at this point in time, my final target, 26.5% drop. And again, may add additional targets, may revisit it later. EAT, Brinker International, Chili's, Maggiano's, Little Italy. It's just wings. Again, I haven't updated this in a while. I don't know. Some of those restaurants may have closed their doors, but again, this is the parent company here that owns those. There's your uptrend line. Here's a long-term uptrend line. Even if you're super bullish on the market and the economy going forward, I think even those bullish can say, yeah, this stock has gotten ahead of itself and it's due a correction. I'm not calling for end of days, drops on these things. Some of them will. I mean, we've seen, again, an increasing number of bankruptcy filings. That's why, I've been eyeing the restaurant stocks. So here's your targets right there. There's a 70, just above $75. And it's nice because you have the intersecting uptrend line. That one would be about a 20% drop. Then you have the 200 days below that. And let's just give you one more here, just in case I don't get around to updating these. And you take this one right around there. I'm looking at this volume of price histogram bar. We had a trading range here. You can see the big old volume price histogram bars. The bottom of that gives you support. And then there's that big void so many restaurant stocks have, that if they fall into that abyss, they're probably going to head towards the lower end of it. But again, that could be months away. It could be a year or more away. SG, Sweet Green, nice looking chart. Pretty sweet chart, in my opinion, for a short seller. Nice, well-defined uptrend line. Clean divergence. Again, divergence high 1, correction 1, divergent high 2, correction 2. And this is all just part of the same big divergence that's been building since back here in earlier 2024, March of this year. That's it. Just like you had, positive divergence there was a catalyst for this uptrend. You have the negative divergence. You break down, take out this support level, 32.90. You're going to go down to these targets and probably then some. I'll give you a max target right now. There you go, 1575. That gives you total profit potential on this one of about 58%. Cake, Cheesecake Factory. Another healthy choice, right? It's just divergent high, just like you had here, divergent low. I wasn't charting this one back then, but bullish. Left that divergent low. You rallied up there. That ended with probably a divergent high right there. Just, this is swing trading, guys. This is, if you invested in this, if you've been an investor in this company, buy and hold. I mean, there's no reason to be here if that's what you're doing. We swing trade. That's that. I'll try to capture some bigger trends when I see them coming and point them out. But this is it. This stock has gone nowhere. It's gone up and down. If you look at it going back, this is as far as I can scroll back on the daily chart. And like so many, there's a lot of stocks out there. They're trading where they were back in 2019. And either way, let's see, divergent high. It looks like this uptrend has pretty much run its course or come close to it. ARCO, Arcos Dorados Holdings, peaked here with a divergent high. There's a downtrend line in which you can short rallies back to, plus the 200-day moving averages. So let's turn off all the trend lines and everything here, and you can see buying pullbacks. The 200s, bullish bull trend. Lost the 200s there, and they've been shorting or selling rallies back into the 200-day moving averages. So that's what that one looks like. And you also have this downtrend line too. And so that could also be a stop if you want to short. Now, this one's just coming off a divergent low. They're going to report in a few weeks here. You can see it looks like November 13th, if that's correct. And you would want to have stops at minimum above the 200-day moving averages in that downtrend line. And look, there's price resistance too. So, on some of these, if you just want to take a starter short position, I think the chart's pretty clear, especially with McDonald's. If that breakdown sticks tomorrow in the regular session, then you can short, and that would be a objective stop loss level. I think this one has a lot of room to fall, and I'd have to I'll zero in. I'll update these charts later. I also have a trend line I just noticed here off the 2020 lows. You can see 1, 2, 3, 4, 5 reactions, broke down, tried to get above it, and it's back below it right now. BJ's Restaurants. Just, dead money stock, but limping along in this zombie market because of all the liquidity slashing around since the great liquidity injection back when COVID hit. That's a pretty important level right there. If it breaks that, that's going to be no bueno for this one. So I don't have much of an opinion on it right now, to be honest with you. DIN, Inequity, or Dine Brands, DIN Brands. Bullish falling wedge, but be careful with that, because again, the stock market's at or near all-time highs. What's this stock doing? This stock peaked years ago. The stock peaked back in 2020 or 2019, and it's in a steady bear market. So if you're not making money in this environment, what's wrong? So be careful about, these you see that in the down, I don't know if we, we had divergence building here, kept building, positive, that is, bullish divergence, and it just never played out. We'd have a breakout, it would go a little bit, the stock would run, and then they'd sell into it again. That's the nature of a bear market, especially a stock that's headed to zero. If it is going to ultimately head to bankruptcyville. So I'm pointing out positive divergence, but again, you can see they had a breakout, started to get going, and they sold into it. And, if it takes out the recent lows, I'll bet you there's a mountain of stop loss orders sitting here, and this thing will probably just take the next leg down if that breaks. And then last but not least, El Pollo Loco, right there, support 1283. There was your uptrend line. There was your sell signal. A little kickback rally back to the breakdown point, and it should be the next sell signal to come. We parked right on it. I had a line at 1283. Created that today because that's where we had that previous reaction low, and we parked today. So break below that level would trigger an objective short entry. Oh, and I also had it because it was this major reaction high right here. And we had some support there. That support broke, bottom fell out, big red candle. Tried to get back to that level, rejected, smacked down. And this has been the base of this stock in recent years, and I wouldn't be surprised to see it go back down to that base again. And, and some more of these restaurant stocks to go lights out. Unless something big's coming for this economy that I don't see. And that's possible, guys. And that's why you don't short it here or break a 1283 and watch it go up to 2084. You say, okay, I'm going to short it there. I'm going to target 990 or 814, and therefore my stop's going to be here or maybe here. If it breaks down, tighter stop a little bit above there, just out of range. You got to give it room so this, they can't get you on a stop raid. That's what they like to do. Anywho. That's it. Those are the 22 components of EATZ, at least as reported by this charting platform. There might be more. Sometimes I'll go into the, to the ETF company, and they'll give you a list of the holdings. But that's what I can see from this charting platform. Okay, let me wrap it up here, get it out to you, and we'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great evening.